China. But how will these overnight cues impact our own markets? We have our research team joining in with just that, what the trade setup is looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Thanks for that. Well, for the past couple of sessions, it's been just a one-way street for the entire markets. The market surged to record highs in yesterday's trading session as well. It was the sixth straight session of a record high for the Nifty. We have gained close to around 5% in 8 consecutive sessions for the Nifty, up around 865 odd points. The Nifty crossed 19,500 on an intraday basis yesterday. We had the broader markets which outperformed, advanced decline ratios steady at around 2:1. Mid-caps are up now around 15% on a year-to-date basis. And these gains came in despite the caution over the FOMC minutes. FIIs continue to pump in money, so they bought around 2,641 crores in yesterday's trading session, though the DIIs equaled it almost in terms of a sell figure. This morning, yes, the global cues are weak again. So we have the US markets which closed in the red despite due to that ADP private jobs report, which in fact exceeded expectations on the upside. We have Asia which is weak, SGX indicating a bit of a flat start. Now we'll have to see whether or not this kind of outperformance relative to the globe continues, or whether any kind of cracks would show up in our markets because of the weakness that we're seeing in the global space. We do have the non-farm payrolls data to watch out for from the US, so that would be keenly awaited to give a sense in terms of what we can expect from the Fed, or whether or not we are actually isolating ourselves from the US as well as the other global markets and becoming a favored destination for the FIIs. Healthy FII flows, monsoon progress, Q1 updates, all of that is aiding momentum, and we probably expect that to probably continue on a relative basis. A little bit of profit booking wouldn't be something that we wouldn't warrant at this point.
Okay, all right. Looks like it could consolidate at these levels. Thank you so much, Ekta, for all those cues. But a lot of stocks on our radar, a lot of quarterly updates again. Surbi has that list. Surbi.
Hi, good morning. So first one on my radar is Reliance. NCLT approves the demerger of the financial services unit, Geo Financial Services. Some Q1 business updates coming in as well. First one is Titan. They saw a revenue growth of 20% on a year-on-year basis, and the jewelry division saw a growth of 21%. Dabur, their Q1 update says the consolidated business, including Badshah Masala, saw a growth of 10%, and the international business saw a strong performance with double-digit growth. Tata Steel, their India production volumes were up nearly 2%, and the Europe production volumes were down 26% on a year-on-year basis. Sobhad, their Q1 total sales were up 28% on a year-on-year basis, and the price realizations were up 25%. Apart from that, JK Cement is also on my radar. The company's arm, JK Max Paint, acquires 20% stake of Acro Paints for 60 crores. And lastly, IOC and Praj will also be in focus as they form a JV for building biofuels production capacities in India.
Okay, all right. That is a long list. Thank you, Surbi, for getting us up to speed here. But a lot of action in the F&O space as well. Manglam joins in now. Manglam.
Well, yesterday was weekly options expiry, and this one again went to the bulls yesterday. In the last hour of trade, we saw a big surge. The Nifty closing in very close to that 19,500 mark. In fact, the last tick was above that 19,500 mark itself. So that was a big positive. The mid caps were really, the start of the show, up almost 1% on that index as well. The institutional volumes on the cash side were, of course, impacted by a couple of bulk deals as well. So as a result of which, the net buy from the FIs was close to around 2,600 crores. The DIs sold about 2,350 odd crores. But the FIs continue to buy in index futures despite a big rally, and despite them being already long in the index futures. We see incremental money chasing index futures. So 780 crore worth purchase, 10,000 long contracts added for just about 2,000 short contracts which are added. And as a result of which, the FI long exposure is now at 73%. Remember, this number just a few days ago was 67, 68 odd percent, and now has seen a bit of a jump. But again, like I said, it was the index, stocks which were the mid-cap stocks which were doing extremely well. And FI has bought nearly 3,000 crores in stock futures. Out there, they added 25,000 long contracts and covered 16,500 contracts as well on the short side. So that's telling you that it is a very stock-specific market, even as the index continues to make new highs. So a lot of long positions added on names like MCX, M&M, and Hindustan Petro. The only short trade right now is that on Eicher Motors. a lot of short positions continue to be added on that counter despite a 10-12% decline over the last few trading sessions. But just keep an eye out on a couple of factors that indicate that maybe we may face some sort of consolidation. One, despite FIs buying in Nifty futures, we are seeing the premium come down from 68 points to around 38 points itself. And secondly, the put call ratio still hovers around that 1.5 mark. So that's something we will have to monitor. In terms of active Nifty options, we have the 19,500 call and 19,500 put. Both of them, the ones that expire next week, are in focus. 19,500 now is a fulcrum. So you're looking at a 100-point range below 19,500 and a 100-point range above that as well. So, on the way up, while the market's in a blue sky scenario, just remember that the supports are moving higher. Now the support zone is 19,350 to 19,400.
All right. Okay, guys. Thank you so much for joining us and prepping us up for this trading day ahead. Let's slip into a break. When we return, Finance Minister Nirmala Sitharaman asks public sector banks to ensure proper reporting of bad loans and step up priority sector lending. More on that when we return.